Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin faces critical technical pressure while Senate negotiations on landmark crypto legislation push into next year and major institutional moves reshape the regulatory landscape. Bitcoin is trading around $89,365, caught in a tight range between $96,000 and $86,000. Technical analysts are raising red flags with multiple bearish patterns emerging. Analyst Ted Pillows warns Bitcoin risks dropping to April lows around $76,000 if key support breaks. A bear flag formation has been developing for nearly a month, and Bitcoin has lost the 50-week exponential moving average while repeatedly getting rejected from upper resistance levels. However, on-chain data tells a different story. 3 key metrics confirm strong institutional support at the $80,000 level. The true market mean sits near $81,000 and has provided clear support since October 2023. The US spot ETF cost basis around $83,844 acted as support during recent pullbacks, and the 2025 yearly volume-weighted cost basis near $83,000 provided additional confirmation. These convergence levels suggest multiple investor cohorts are defending positions in this price region. Senate negotiations over comprehensive crypto market structure legislation are progressing but remain incomplete, with talks likely drifting into January 2026. 4 significant disagreements remain: ethics rules for government officials, whether stablecoins should be tied to yield, SEC powers to determine which tokens it governs, and treatment of decentralized finance. Despite disagreements, Digital Chamber CEO Cody Carbone expects real movement early in the new calendar if markups proceed in January. In a major regulatory development, the Office of the Comptroller of the Currency issued Interpretive Letter 1188 on December 9th, explicitly permitting U.S. national banks to conduct riskless principal cryptocurrency transactions. This allows banks to match buy and sell orders between customers without holding inventory risk. Comptroller Jonathan Gould simultaneously signaled openness to approving digital asset firms for national trust bank charters. This opens the path for large banks to offer customer-facing crypto brokerage with minimal balance sheet exposure. Strategy, formerly MicroStrategy, retained its position in the Nasdaq 100 index following the annual rebalance. The company has accumulated 660,624 Bitcoin valued at $59.55 billion. However, MSCI has flagged concerns about crypto treasury companies, with a decision expected in January. XRP is holding at $2 following Ripple's conditional approval from the Office of the Comptroller of the Currency to charter Ripple National Trust Bank. This positions Ripple as a federally regulated financial institution, significantly strengthening the institutional foundation for the RLUSD stablecoin. A potential headwind is emerging from Japan. The Bank of Japan is expected to raise interest rates on December 19th by 25 basis points to 0.75%, reaching the highest level in approximately 30 years. A stronger yen historically creates downside pressure on Bitcoin by tightening global liquidity conditions. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.